Hello and welcome to Commodity Champions, your weekly dose of what's brewing in the commodity space. I'm Manisha Gupta. Well, the gold prices have rallied 18% in this year so far and has gained over $100 per ounce since the beginning of August itself. There are fears of recession amidst an escalating trade war and collapsing bond yields that have fueled this rally. The yellow metal has hit record highs not just in India but UK, Russia and a whole host of other countries. However, the spike in gold prices have hit imports into India, which have now dropped to $1.71 billion in the month of July. So how will this rally sustain? Is it the right time to invest in gold assets? And what are the tax implications? Over the next 30 minutes, we discuss exactly that. Joining us to take this discussion forward are Mr. T.P. Oswal, who's Senior Partner of T.P. Oswal and Associates and Precious Metals. And we are also joined by Shekhar Bhandari from Kotak Mahindra Bank and Mr. Surendra Mehta, who is Secretary at India Bullion and Jewelers Associations. Gentlemen, hi. Thank you so much for joining us. Mr. Mehta, hi. Let's begin with you first. And we have seen a tremendous rally come in case of the gold prices. Most of the global banks and experts are of belief that we might see further gains coming in from gold, even at these high levels. What is your sense and what are you expecting in gold going forward from here?
See, I personally believe that 1520 is the resistance level. You can see since the last 2 days, the gold is unable to cross 1520. It is not closing beyond 1520 a dollar. So in my opinion, this rally is going to take a short break from here now, and probably it will see a downward trend of about $20 to $30 or maybe $40, but thereafter again it will rally further, and I'm very hopeful that by Diwali this year this should touch about $1,600 a dollar.
Mr. Oswal, getting you in the conversation as well. First of all, since you are a tax expert and you look at various ways on what really attracts tax and what you shouldn't be doing so that you don't have to pay all of that tax. So when it really comes to gold as an asset class, what are your views? Because Indian households hold enough and more of gold, and with the way the gold prices are gaining, there is this thing about actually attaining further gold to ensure that you are hedged against other asset classes, because real estate or equities have not been able to give you those kind of returns. So in the kind of scenario that we are right now, what would you advise? Is it a good time to start buying gold?
Well, as far as tax issues are concerned, there are multiple. For example, starting from the time you purchase the gold, if you have purchased the gold in cash and you have not been able to explain the source of your cash money which has come in, that itself will be caught, and that will be subject to huge tax assessment, and your tax liability could be as high as 75 to 80% of the total value of the amount deposited. And therefore, always my recommendation is, whenever you invest into the gold, invest via check or via electronic payments and keep the invoices with you, so that when you sell the gold, you have ability to prove when did you purchase and what is the source of your investment. When you sell the gold, you will be liable to pay either capital gain tax or long-term capital or short-term capital gain. Unless you are in the business of buying and selling, then it becomes a business income. If you hold gold for more than 3 years, then it is a long-term capital asset, and the long-term capital gain will be levied if you sell it. When it is a long-term capital gain, you can get an indexation benefit as provided under Section 48, and therefore the index cost will be deducted and the net profit will be determined after deducting index cost from the sale price. So therefore it will be a long-term capital gain subjected to 20% rate of tax plus surcharge and education cess separately. And if you are super rich, then the tax will be different. But if you have a long-term capital gain, you can invest into a property. If you do not hold any property, you can buy a property and claim exemption under Section 54F. So if you have one property, second property also you can buy by selling the gold as an asset, and 54F can be claimed. So this is as far as gold is concerned. The same principle will apply to the gold ETF, gold digital, gold any other form, except gold is another method whereby you can make an investment is the gold bonds, the sovereign bonds of the government of India, wherein you can buy the gold bonds, and that under that scheme the gold purchased by you and so sold it, surrendered it to the government back for getting it gold or by getting it cash, then there will be no tax. Such gold bonds attracts an attractive scheme of investment,
sure,
where they also pay you 2.5% interest, and that interest is subject to tax as far as the various forms of the golds are concerned. So if you take gold in the physical form, which you must ensure that it is a risky asset, and the risky asset you should have a safeguard, sufficient ability to store that into a proper place, otherwise you are carrying a big risk. So therefore these days I would not recommend anybody to buy physically gold unless it is necessary for marriages, etc. Then it is okay. Otherwise bond is a better option. You are holding a paper which gives you a right to get back the gold from the government,
right,
and then there is no problem of, there is no risk of holding that gold in your hand, as I stated earlier.
Absolutely, Mr. Oswal.
And
thank you so much for
lastly,
explaining it in all of the
GST
detail.
on that
Sure.
gold is not very high.
Yes, we get that. But I will be coming back to you, Mr. Oswal, for more questions as well. Mr. Mehta, I want to come to you with this. Yes, there are various ways of buying gold, and as Mr. Oswal explained, that if you are investing for a longer period, then gold bonds are the best, because there's a maturity date to that, 5 years and 8 years, etc. But if there is somebody who wants to make use of these current gold prices, then what is the best way to make that return? Because when we've seen the prices gain up by 18% in this year alone, so and we may not perhaps see that happen next year. So when it is a shorter duration, then what are the better ways and means to do this?
See, in my opinion, at the current level, one should really look at a systematic investment plan as far as gold is concerned. If you are really interested in buying gold at this level, then please do it on a monthly to monthly basis. You can bifurcate your investment into monthly basis. See, this price escalation, this is unprecedented price hike in last year, and now I think everybody must understand that gold is an investment product. It is not a consumable item. Even if you are buying a jewelry, a consumer need to understand that it is an investment product. In my opinion, the people should accumulate, the consumer should look at gold as an investment option at this stage also. And there are various ways to invest. There is a digital gold scheme available where you can invest even rupee 1. But if you look at the gold bond scheme, you have to buy minimum 1 gram of gold, which will cost you about 3,500 or 3,700 rupees. So I would say there are many schemes. One should look at the schemes and should buy the gold. Physical gold, of course, as far as I will agree to Mr. Oswal to some extent that yes, gold bond is a better option. But if I look at my house, then probably my wife would not like to keep the gold into like a paper gold or
you can't wear a gold bond.
Yeah, my wife cannot wear a gold bond, so I will have no option but to buy the physical gold. So I would say that okay, you can split your requirement with the physical gold, and I think our wives they will take care of those gold very properly. It is not at all a risky investment for them.
All right, that's a good point to take. But let's also get in Mr. Shekhar Bhandari, who joins us on the show now. Shekhar, hi, good to have you. We are discussing on whether or not it's a good time to buy gold and how should you be keeping it, and what are, of course, the tax implications. You know, Shekhar, a lot of global experts now say that gold is in a structural cyclical bull run right now, and you might see the gold prices gain up to 2022 or even 2023 for that matter. One, of course, what is your sense on that? And two, what according to you is the best way to buy gold?
So Manisha, I think good to be on the show. I think a lot has changed in last 3 months across in the world. From where I think we were and now where we are. Gold is set to gain as recession, trade, geopolitical risks, and the yields are falling. If you were to say the expectations of China slowing down, US slowing down, a dovish central bank, the real rates actually being lower, weaker equities, And when you say, I think all of these things put together, and the future not being very bright, it actually becomes a case for a safe haven and something I call gold becoming a strategic asset rather than being one of the assets which used to be earlier. So it now no longer competes with other asset classes for return. It now competes as a strategic investment, strategic asset in the overall portfolio. Given the entire backdrop, what you stated, 2021, 2022, gold seems to be for a bull run, thanks to, I think, a lot of uncertainty in the marketplace.
Shekhar, also, I was asking my other guests on how should you buy it. Mr. Oswal says you should buy the sovereign gold bonds. Mr. Mehta feels that yes, you should buy that, but also buy some physical because you have to keep your household happy. What is your sense when it is about investing in gold? What is the best way you see it being bought as?
I think digital is the way to go forward. And if you want to do investments, the government has come out with one of the best tools called sovereign gold bonds. The tranches are in a good quantity, and if you can invest up to 5 kgs and 10 kgs in the per individual per year in gold in paper form, I think you can't expect it better. You have a return on top of the investments which you make. You have gold-linked returns, 2.5%. Return over and above the gold returns, freely tradable, security being taken care of by the government, and the guarantee of Reserve Bank of India or the government, if I were to call, is the best way I would advocate an investment to be made. It no longer a challenge to hold a physical coin or a physical instrument, no longer to check whether the purity is 995 or 999, and no longer to see whether I think should I store it in a locker or should I store it in my I think in a bank. And when you have a sovereign gold bond, a unique special instrument created by the government to promote digitization, it is one of the best ways to invest in gold in India right now.
Well, absolutely. Right now, yes, but there are various global central banks buying gold, and there are various citizens as well who are trying to defy the recession that is in various countries, and they are buying gold for their reasons as well. So one thing is clear, we are not asking a question on whether you should buy gold. Yes, you should be buying gold. We are discussing on how much should you be buying, when you should be buying, and what are the tax implications is something that we will be discussing after this very short break. We still have with us our guests, and we are discussing now the tax implications on gold. We, of course, had Mr. Oswal telling us on how it is a 3-year as a short-term and a longer-term tax implication that you have on gold when you go out to sell it. But Mr. Oswal, I also want to talk to you about the older gold that comes into the market. You told us on how the receipts and invoices should be maintained. If there is a situation where a gold holder, a physical gold holder that is, does not have the required documents, what should be the person then looking at in sense of taxes?
See, there are various options now. The various issues you have raised in one simple question. Now, for example, older gold, how did I acquire? Normally, for example, in the case of a married family, the gold is generally received at the time of marriage by the lady, from the parental side. So therefore, generally in India it is expected 500 grams, 400 to 500 grams every lady should have. At least a reasonable income lady will have that, and the tax authorities accept that. And therefore, if you sell that gold, automatically the issue will arise is possibly you can take the date of your marriage as the year of a marriage. In that year, what was the price? And since you have received from the parent possibly will not keep any record, the cost can be worked out on that basis. Okay. Sometimes you receive this by inheritance. You receive from the parent as per their will. And if the parents have given this as per their will, in those days parents were filing the return under the income tax or wealth tax. If the returns were filed under the wealth tax, gold being gold being subjected to wealth tax, and in the parents any of the return it was disclosed as is wealth, and on which wealth tax has been paid for the years. Of course, from this being an unproductive asset, the gold was subject to the wealth tax as late as the 12-13.
Sure.
And therefore, if you have paid wealth tax, that is an evidence that the gold was there from the parent side, and under the will they have disclosed that this much wealth this much gold I am giving to my this son or that son or the daughter as the case may be.
Sure.
So that evidence you should collect and keep it with you, so that at any time when you want to sell the gold, your source will be inquired, evidence will be required, and this evidence will come to your rescue. If you are purchasing the gold from time to time from your savings as a good habit, even by SIP somebody mentioned as a good habit, in that event we would recommend keep the invoices against which you have made the payment, and those invoices will come to your rescue.
Well,
and at times it happens that you may not have the invoices, and that creates some difficulties.
Well, yes,
now if you are a high taxpayer holding more than 50 lakhs of rupees income and filing your return, you are required to disclose assets and liabilities in your return of income, and in that case if you have disclosed this gold as an evidence which has been accepted by the tax authorities, subsequently it can come to your rescue.
Well,
these are various methods,
yes,
but record is very essential. The documents must be kept preserved properly.
Well, it's not just about going out and buying gold all the time. It is very important to have a disciplined approach as any other asset class. Mr. Mehta, you want to add something to that?
Yes, definitely. I fully agree with Mr. Oswal. The evidences are very important to prove that these were ancestral gold, and as I stated to you, there was an income tax internal circular of 1994 wherein a married woman can keep up to 500 grams of gold, and it is called Stridhan. An unmarried girl can keep about 250 grams of gold, and a man, whether married or unmarried, can have 100 grams of gold. Though whenever the searches are conducted, this gold is not seized by the tax authorities, but you will have to prove to the tax authorities through the evidence which Mr. Oswal suggested that these were the gold acquired as an ancestral gold, or it was a Stridhan. Or
so as a married woman, can I hold 500 grams of physical gold and plus a sovereign gold bond and then some ETFs?
Yeah, definitely. This sovereign gold bond, of course, because you will buy sovereign gold bond only through the checks. So of course that is all accounted, and you need not prove that it was an ancestral or something. But in respect of gold which you have inherited for so many years, probably you will have to prove. But as I stated, up to 500 grams, nobody will question you.
All right. So that really brings us to another question, Shekhar, and this one is to you. How much should be in your portfolio? How long should you be holding it? The tax implications, of course, my both experts have explained, but these questions really are to you.
Just to be one point, on sovereign gold bonds, there is no capital gains tax, so you can have, accumulate and sell whatsoever you want. To answer to your question that what is a good percentage to have in the portfolio? Internationally now people have realized that it does make sense to up the portfolio from 5% to probably 8% of your total wealth in gold. And the reason obviously being the safe haven asset rather than only for returns. Gold has always been a rescue, especially for Indians.
But Shekhar, just coming back to you with
more
what
as a currency.
Yeah, Shekhar, just coming back to you with what you said, that gold is a strategic investment. Wouldn't you think that 5 to 8% is way less as an investment or a hedge when it comes to gold, especially in our current scenario?
It depends on, I think, strategic investments can be from the perspective of the country, it can be from the perspective of the individual. From the individual point of view, the markets change, the markets have to grow. I think I'm optimistic, so I would generally believe that whatever is happening in the marketplace, I think does have remedial steps being taken by the governments and by the central banks, and that the whole overall objective should be growth. And when the growth comes back, the strategic investment which I see a limited point right now. In last 20 years, you had only probably 2 or 3 years where you thought that it should be a strategic investment. I expect the same thing hopefully for next 20 years as well. So when you say 5 to 8%, the whole objective is to be in and around that particular share.
Shekhar, my other question to you was, while of course we understand the tax implications of holding gold, whether it's for 3 years or more, but what is your sense when you give a period horizon of 20 years, as you just gave in your example, then what is the best way to hold gold, and how long should you be holding gold in your investment?
If it is investment, I will always suggest sovereign gold bonds. The tranches are good, and we did speak married women to have 500 grams of in a normal scenario, 250 grams when I think you're growing up. Sovereign gold bond can be, I think, much higher, and per annum you can be I think 5 to 10 kgs and per individual. So if you want to accumulate, if you want to have, I think it is a good way to have. Capital gains, no challenges as far as India is concerned. Redeemable in the marketplace, on the stock exchanges, secured, and guarantee of the government. I think you can't expect more as far as investment is concerned when it comes to gold.
Mr. Mehta, I also want to get your opinion on, another trend that we always see when the gold prices are as high as they are right now, that people start bringing their old gold into the market, but they don't want to part away with it. They want newer gold to take back, newer designs perhaps to take back. What is the best way to go ahead when somebody wants to do that?
In that scenario, I would say that to avoid the capital gain tax, they should not exchange the old gold with the new gold, because the exchange transaction in GST and in income tax are considered as two separate transactions. One is buy transaction, another is sale transaction, and the customer can be subject to capital gain tax in that case. I would rather suggest that if you have an old gold and you want to buy a new jewelry, then please go and tell the jeweler that please melt this gold and convert this gold into a new jewelry. In that case, there is no capital gain tax. One most important thing I would like to say, you just mentioned about last 20-year scenario. In last 20 years, the gold prices have moved from 4,000 rupees to almost 40,000 rupees. So please look at gold as an investment in that sense also. In next 20 years, what will happen? It may not rise 10 times, but it can rise at least 5 times.
Another thing, Mr. Mehta, and Shekhar, this one is to you as well. So, Mr. Mehta, you go first. And while we have discussed about various ways on how you can invest in gold, but ETFs is something that really was the first way of investing, financializing the whole way you invested in gold. But that really hasn't caught up so much. What do you think are the drawbacks there, and why haven't really people taken over to that?
See, as far as ETF is concerned, one needs to understand that the ETF companies, they buy the physical gold. So when they buy physical gold, they pay 3% GST, and they keep gold in their lockers. And I don't think our household can be happy because we are already paying tax. Then I would rather buy a sovereign gold bond, or in that case,
digital gold maybe.
So I would suggest that is why probably ETFs are not working good in India, because we have a passion for the physical gold. Yellow metal is very important in every household. So I would say ETF, as far as India is concerned, is not recommended.
Right. So that really is what we have from Commodity Champions today. Mr. Mehta, Shekhar and Mr. Oswal, thank you so much for taking time out for us. So the choice of holding gold clearly has been the sovereign gold bonds. 5 to 8% is what you should be holding in your portfolio. And of course, another way of owning old is digital gold. Jewelry and etc. I'm assuming you will anyway continue to buy. But that really is what our experts are telling us today. Thank you so much, and thank you so much for watching Commodity Champions. But stay tuned to CNBC TV 18.